The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. And I don't know if there's anything else you can say other than that. Kind of a quiet day, as many have been here lately. Well, where's buried my quotes so deep in these windows, it's hard to find them. As we start the day off, what were we off? 1 point on the S&P cash. We were off almost 9 points on the S&P at the low earlier in the morning. Volume is still extremely light, 1.76 billion shares, which means that, we should be having somewhere around 2.1 to 2.4 billion shares, even in August. But there's something with the volume that it is going away. And could it be the end of high-frequency traders? It could be. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And the question is this going to be a heartstringer? It's going to be a very special edition of the Power Trading Hour. Oh, boy. And what can you say? It just, I don't like, normally you get back up to highs and the volume remains about the same. It doesn't have to be great, but it has to be okay. Eventually you break out. But normally when you see markets that go up to highs and they have no volume and they just keep trying to beat out higher highs with even less volume each time, it goes the other way. So I'll have to be somewhat bearish as we continue out here. It looks more like a market that is fixed by the trading, not the trading gods, but the trading Fed, than anything else, with a lot of effort to come in to the dollar. Anytime this market looks weak, they push the dollar back down. Anytime it's strong, they push it up. And it looks to me like they want to keep this stock market doing a lot of nothing for a while. And I'm not exactly sure why. I think they know that if anything, if we had a jolt, that we'd probably be down fairly extensively. That we also don't have anything that looks like some extensive shorting. In fact, the short interest is about as low as you can get, and the bullish sentiment is as strong as if you've had since 2011. So you've got everything to say that if there's an upside, it is extremely limited. If you have a downside, because there aren't a lot of shorts to cover, the downside would be much more heated than most people would think. Well, anyway, let's get this party started with a little bit of history.
And it's all just a little bit of history repeating.
It always is. Nothing but history being repeated. On this day in 1787, John Hitch launches the first successful steamboat run in the United States when his 45-foot boat smokes and booms up the Delaware River as delegates from the Constitutional Convention watch it from shore. But he never gets cost under control, i.e. it was never something that he could sell. So Robert Fulton, whose steamboat launched about 20 years later, is instead remembered as the father of the steamboat. I think it's really kind of funny because this repeats itself many, many times. Everybody says that they know who invented the light bulb. He's actually, I don't know, maybe 25th down the line for doing that for Edison. He actually made the first light bulb that would last a significant long time by finally coming out with tungsten, finding a way to make a tungsten wire light up. and putting it in a vacuum. A lot of people had tried some different stuff, but it lasted. Therefore, it was worth something. And of course, I'll always laugh my rear end off because of Steve Jobs when he lied about coming up with just about all kinds of stuff, from the mouse to graphical user environments to inventing the smartphone. All of those things and others existed before he made them. He just made it a little better. In fact, a lot better. And that's what did it. We all stand on the shoulders of others, whether it's the stock market, where we learn things from other folks. The price would be pretty expensive to learn the stock market if others hadn't come before us. And we hearken back to probably the first big chapter, which is the tulip mania. And we know that the madness of crowds has no end. Anyway, off 1 point in the S&P cash, as I said, less than 1.8 billion shares. Can't even get to 2 billion shares anymore. Man, this volume is light. And, of course, every time we get moving down, someone wants to buy any kind of dip. 5 points in the S&P, 8 points is great. 10 points is the buy of a lifetime. They continue to pick up pennies and quarters in front of a steamroller that's going fairly fast. And you are on very slick shoes, and the steamroller's on ice. And a lot of people trying to pick up dimes out here. My thought is that they will slip and fall and be as thin as a dime fairly quickly. Not a lot of news out today other than what I really wanted to get to first out here, and that is the IBB. The reason why is that you've got a fairly good double-edged sword out here, but you also have some folks that I think are, how can you say it? Just, I'm going to say it, insane. I think it's Mylan, M-Y-L. I'm pretty sure it was them today. It's not moving a great deal, but they are getting slammed and probably will over the next few days. It's fairly quiet now. I suspect that all the yelling and screaming we had about high prices for drugs is going to come back for this election season. I can't imagine anybody doing this on purpose, but it seems so stupid on its face that I think that it has to be planned. Either that or whoever's running Mylan is the stupidest person in the world. If you haven't heard already, we got a buyout, which kind of pushed the IBB up higher. But Mylan has raised the price of their EpiPens. Those are the pens when you start swelling up to the size of an elephant because you had a peanut maybe go by you, maybe in your same airplane, maybe your kids had it. These things had been about $65 to $55 over the last year or two. What happened was one of the companies that made the competitor to Mylan, I can't remember who it is now, just said they were giving up on it. So what does Mylan do? They raised their price. We'll talk about how much they're raising the price of these EpiPens when we come back. And we know what happened the last time drugs were raised that much. Do they think that they could just get by and no one would notice? I don't expect anything different than before. We'll talk more about this when we return.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, Mylan had a competitor to its EpiPen. If you've ever seen in the news, people stab themselves in the leg with the EpiPens. Those things had been about $50. They'd gone over the last year to about $65. That was supposedly on insurance issues. And today they said they're going to raise the price 400 to 500%. I think you want to kind of keep a low profile until after the election. This just seems to be too much low-hanging fruit. But keep an eye on that one, because that'll probably be the poster boy for getting slammed in the near future by politicians. I can't say whether it's rightfully so or not. Just incredibly tone deaf to be waiting till this period in time in the last couple of months before election to start raising your prices 500%. This seems rather stupid to me. Anyway, the IBB up a bit today, and that is on some buyouts. A lot of thought in the markets right now, and that is just very tough to figure out why everybody's buying now. Well, money is cheap, and everybody thinks cheap money is going away, so they're buying anything that isn't nailed down. They are paying too much, but if you don't have anything, if your interest really doesn't cost you anything, then paying up for a company that, is going to take you 3 or 4 years to break even, to 5 years to break even, does it really matter? A lot of things can change in the meantime, but as long as cash, is so incredibly cheap, if the companies can just grow 5 or 6% a year, you're still going to make money, and that is the thought out here on some of these buyouts. Can't remember who was getting bought out today, but it's like an 11 or 12% premium, so I didn't spend a lot of time looking at it. But, you've had something I'd been looking at, which is, of course, as long as this remained underneath the 3x3, you could say that this thing was a nice double repo pattern. This would invalidate it. I don't know just how much it's going to invalidate it, though. As I said, maybe this just pushes this thing off a little bit farther. I hadn't pulled the trigger on it. As I said last week, I thought maybe Wednesday, Thursday of this week would be much more likely for the short on the IBB. You're back above the 3x3, so that's a little bit of problematic out there. We're going to go back into the Wayback Machine. I want to see how some of these stocks that we talked about last week are doing and what they've done in the last week. You know, some of these have just gone sideways, like Donaldson and Company. Let's see if I can't do this again here. Okay. And let's turn that off so it looks just a little closer. Been kind of watching these stocks at highs, and the best we've gotten is kind of sideways for the most part. Donaldson's DCI, 1.1 million shares going back to the June 6th high at $37.08 with 1.1 million shares. And just on Friday, 370,000 shares. So a lot of these things giving more than a signal. Blind man should be able to see it. Francesca Holdings Corporation, FRAN, Fran, for those folks in Lutz, down, got whomped on the 17th of May, 14.6 million shares up, and into this gap. What do we have? Friday, 470,000 shares today, 300,000 shares. Can these things kind of still fill the rest of these gaps in light volume? I think they can, but there isn't a whole lot here. First Republic Bank, another one with very light volume. Last 3 days, we've been looking for 2.2 million shares to break this $72 move. Thrust through it on First Republic Bank FRC with about 700,000 shares when we were looking for 2.2. Even let's just say we're going to give it the benefit of the doubt and look at the May 31st volume at 1.1 million shares, still just out here at these highs with not a lot of volume. Norwegian Cruise Lines continue to think that the IBB, probably the financials and energy stocks are the weakest stocks, even though that we had a nice bounce in the energy stocks. It looks to me like the short squeeze in energy is over. And now we're going to see actually what the truth on the downside is. What do we get to? $39 and some cents on the West Texas. I was still thinking that we get to that $38 level, and I'm wondering how fast do we get there. Norwegian Cruise Lines and travel, another sector I think that is weak, especially with Zika. You never know when that last little piece of straw is going to get thrown on the camel's back and it will bust. But this one, you had you had the same volume as you actually busted it, but you had a ton of volume coming into the high volume low. That was on the 9th. And, you know, it's kind of gone sideways out here for a while, but still not getting a great deal of love. I continue to see a great deal of these stocks out there that are close. It looks to me like breaking down. In fact, last summer, we talked a great deal about how many energy stocks were breaking lows with lighter volume and discontinuing down. I wonder if this is not another repeat just 1 year later in a lot of these stocks, which is you never get the volume, but they keep breaking down with lighter volume. I wanted to see how Noble Corporation, NE, did. February 11th, 7.2 million shares at $6.66. Went through it with basically 7.7 million shares on Friday. And, you know, we already have 6.4 million shares. So some of these also giving some signals. On the upside are breaking, or at least trying to break out, WPX Energy. This one tried to get through with 11.6 million shares when it needed 16 million shares going back to the June 8th high. Had 1 day of light volume on Friday. of 13 million shares again. And then, of course, down on lighter volume, but you're back into the trading range. Wanted to see, we've talked about Weight Watchers as maybe a stock for this fall. I'm going to be watching it for a while. You got high volume at the highs. You've got some level of consolidation down here at around $10, but it's going to need a lot more consolidation. This thing's pretty much just gone sideways since we talked about it last week. Zebra Technologies, this one's been banging against resistance at $70.29 from the February 25th high, 2.6 million shares. Spiked it on the 19th with 950,000 shares. And, of course, trying to play around at these levels. You can give me an email at path@tfnn.com. You can call me at 877-927-6648. And, of course, you can post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, in the den, someone brought up EOG Resources. And I've got a problem with stocks that do not have continuation patterns when they do break previous highs. November 3rd on EOG, can't say that it's bearish, but I can say that I don't like what it's doing, i.e. I give a stock 3, maybe 4 days after it breaks a previous high with a whole lot of volume to get some continuation moves on it. Going sideways is not a continuation move as far as I'm concerned. November 3rd, $79, or excuse me, November 3rd, $9.52, 5.5 million shares. You do break it. You do it with a great candle, 8.7 million shares on the 5th of this month, and then it just does nothing. And that is my problem out here, is that these stocks tend to attack these stocks, either come back into the trading range and or do nothing. And this is nothing for how many days now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Maybe that's bullish in somebody's book. I have not heard the bullish cause on a stock breaking previous highs and going sideways. So that would be my talk. Are they weak? No, there are some weak energy stocks out here, but to me it would be tough. Okay, that was the 17th of last week. Let's go to the 18th and start looking on how some of these stocks have done. AKG, we talked about this one last week, the gold company. This one was a fairly brilliant high in the fact that June 13th, we had 2.9 million shares at $4.53. Missed it by a penny, but with just 1.1 million shares on June 6th. And this is a gold stock of some sort. And August 16th, we do pierce it. We pierce it violently, but only do so on less than 1/3 the volume, and this thing's come back into the trading range. The energy off this recent low of July 25th is not all that exciting either. Let's see how these got. Axovent Sciences, we've been watching this one since I think a couple of days ago as it's come up into this gap. That was the gap of February 2nd, down on 1.7 million shares. Been going sideways with mostly, 330,000 shares. That compares to the last attempt in this gap at 480,000 shares on June 9th. But again, fairly light volume. BAC wanted to see how this thing approached its previous high. You can say this one came fairly close, 93 million shares to basically 100 million shares. If you look at the April 27th high, $15.30. So it's a nickel off, but volume still not, you're going to call it equal. I wouldn't be shorting it, but still rather problematic for me. Let's get back to Baidu. I thought maybe this thing was making an ABC down, and it could be fairly close. Let's take a look here at this, if it was a expansion. See if I can get the next one out here. What is that, 185? I think it returned too far. The B1A. We'll say this one's the B down here. And we'll say this is a B, the C. Okay, retraced to 781. So the people that like the bigger retracements out here would be nice. Energy was not all that exciting on Baidu, but you'd be set up on a pretty nice ABC to 148.65. Been looking at some kind of reversal out here with volume. So far, we don't have the volume today that I'm looking at, but still kind of interesting. Cree was coming out with earnings. The last time we looked at it, it fell apart. It's down with volume. I can't say that there's anything new to report on that one. Discover Financial, one of the better looking financial stocks out here, is another one of these up here with light volume has hit highs. You conservatively, you would have wanted at least 3.7 million shares to take the trade. That's probably what I would have used. The April 21st high came in with 4.3 million shares, though. Came in with 3.1 million shares on June 7th. And then we spiked it on August 15th with 2.9 million shares. So we continue to see lighter and lighter pushes up here at these highs. The question is, when does the back of that camel break? Diamond offshore drilling. This, if I was bullish on offshore drilling, thinking that crude was going back to 100, some of these stocks should have held today. So we'll watch the volume before the end of the day. But Diamond offshore drilling is going into its gap of February 26th. You had 2.5 million shares that day. You already pierced it on the 17th of this month with 2.7 million shares today. Fairly light volume. And that's where I'm going to say that maybe we are looking at something much like last summer. I don't know if there's some organic thing that I've missed out here, but just remember how all the time that these energy stocks should have been able to be bought down here on light volume, and it just continued down all the way in the fall. And I don't know if there's anything new out here. Let's see, I'm just seeing at it. Just looking through the den out here. And of course, idle hands are the devil's workshop. We're off 3 points on the S&P cash. Anyway, Diamonds offshore, KFY, Korn Ferry, this thing, if it was over $30, I probably would pull the trigger on this. Looks fairly nice. Gap down with heavy volume of 4.5 million shares. It's back into it with about 500,000 shares a day. Just need a little bit more meat on the bone for that. Lincoln Electric, another one of these stocks that hit a high with very light volume. It's done nothing but go sideways for 5 days. Nothing to report new out here. Miller Herman, we talked about this one. This is the canary in the coal mine for hiring in office jobs. If you're buying new desks and new chairs and new file cabinets and all that kind of stuff, Herman Miller and Steelcase are the companies you want to look at. You know, you wanted to see a lot of volume on Friday as it broke its previous high. You had 340,000 shares compared to that 1.3 million shares back on the 27th of June. Schlumberger, slumber is the operative words out here. We talked about how we didn't like this one on Thursday, breaking two new highs on lighter volume. 5.5 million shares compared to the 12 million shares on April 12th. Wow. And we're back into the trading range once again. So we're just going to go and do a review of last week's no volume challenge on the lows and the highs and see how these things have developed over the last week in a market that is fairly tight for its trading range. Yep, Ben-Hur, another disaster.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And all my days in Hollywood, I learned one thing, and that is it doesn't matter how much action you have. If the script is not compelling to begin with, you're going to have a huge problem. Somebody commenting about Ben-Hur, and I've read the reviews and some of the people, and everybody's known that this thing was going to be a horrible bomb. Also, thing's been sitting in the can for about 6 months, and they just hoped to bring it out on a weekend when everybody else was done watching new movies, thought maybe they might catch a few. But I don't know. Maybe it'll do better in China. Just if you rely on all action and don't want to do character development or script development, that's why almost everything in the animated sector does well. How many really bad? Yeah, Ishtar was a huge high-budget flop. Strangely enough, a lot of those flops ended up doing well in foreign countries, and they're not as bad as a lot of people think that they are. You can write a lot of stuff off, and people do, for losses. It's not as bad as everybody said it is, and of course, it's never as good as everybody says it is. It's somewhere in the middle. But interesting. I remember sitting in a meeting once for, what was it? Sequest. And that had Roy Scheider on it. And he was just cashing his checks. He knew it was a total, after the first year, they couldn't get a script that even made even slight sense. And why I never interacted with him, I'd hear people down the hall yelling and screaming. And I loved him in that jazz. And I loved him reaming the writers to actually come up with something that made more sense than just various things blowing up and lasers underwater and other stupid things that didn't make any sense. But I don't know what else you can say. Yeah. Sequest, DSV. I had several customers working on that. Several people that I'd known that had started off at local affiliate television stations had made it big and gone to that show. There's still a lot of them still working out there. iShares Trust, SLV. As we said, this one had some very light volume. But you had this big gap. You probably had to look at coming back at some of that. The volume, I think, is a little wrong on this one. I need to get it fixed. Let's take a look at it again here. There it is. Don't have a pen. I'll have to make a mental note, which they don't go very far. Anyway, this is back into the gap. What we have is on 7-1, this came up with 30 million shares. We're back actually in this gap with light volume. Unfortunately, you got 3 identical gaps. And the question is whether or not you suspect that this is a 3-gap play and all 3 get filled. That would take you back down to $16.40 on, that's basically the Sequest was a smarter, or the last ship is a smarter version of Sequest. They at least put it on top of the water. What can you say? You can look at the iShares as possibly being a 3-gap play. If you had any kind of hint from Jackson Hole this week that they are going to raise rates and they're not going to sit on the fence anymore, I would be very surprised out here to not see that this thing got and filled at least most of that bottom gap from, June 24th. So there may be a lot more pain than I think a lot of people realize back in SLV. STET, State Street, another one of these stocks, didn't make that big a deal out here. TXT, which is Textron, has been coming up to a gap that volume started to pick up on. 2.3 million shares on the 6th of January. So you wanted to see a lot. You got 5.6 million shares on April 20th. Went right back into the trading range the next day. Last few days, we've been having less than, 600 and some odd thousand shares. So, again, very, very weak as we go on to the right-hand side of the chart. Wanted to see how WAB Tech busted up through its gap. You wanted to see some volume on this one and do not see it. Down on the June 24th with 2.1 million shares. The next day it goes down 2.2 million shares. That gap got challenged by 660,000 shares on June 12th. Comes back into it again on the 8th of August. Neanders goes sideways. The last 3 days, 446,000 shares, 802,000 shares. Today, 758,000 shares so far. But again, you want to be looking at these gaps over here that are in the 2 million share range, and you don't have a lot going on out there. What else do you have? Talked about Weight Watchers. It was very interesting to watch United States Steel. We brought this up on, what was it? We brought this up on Friday. I think I even talked to Steve Rhodes during his show about it, because I was thinking if this thing was going to catch a bid, this is pretty much where it would have to be. Volume on Friday was 18.6 million shares, up a little bit today on 12.7 million shares so far. Could you get to the same volume? Maybe. Going to be very tough to see what else goes on out here. When we look at the XLF, another stock, at least ETF, that is doing a whole lot of nothing. Volume was a little light going into the August 8th high. You needed about 5 more million shares than you got than the 41 million shares. So it's gone sideways. Now it's done nothing but go sideways. Increasingly smaller moves out here. Very light volume moves so far today. 14, let's call it 15 million shares compared to the 25.5 on Friday. But again, you're looking for 46 million shares. It's hard for me to see where all that energy comes in at these highs. Could it creep a little bit higher? It could. I just don't suspect it does. I suspect we get some kind of information out here. There's just not enough shorts to drive this market higher, in my opinion, at least today. The XOP, we've been watching this one come in. Talked about on Thursday. April 28th, 37.31, 21 million shares. Spiked it, went right back into the trading range on June 8th with 15 million shares. Could only do 12 million shares on the 18th of this month. and like I said, 12 million shares. Friday, we had 10.8 million shares on the downside as it pulled back. Today, about 11 million shares. The energy off this low is not all that bad, but it certainly looks more like a trading range than it does like an all-time high. But I'd still think that maybe we've got maybe $48, $49 to $38 trading range on West Texas setting up. We will be back after this short timeout.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what do we got going on out here today? Kulik and Soft. I had this in my newsletter this morning. Again, piercing previous highs, not very much volume on this one, which is a chip manufacturer, a supplier to chip manufacturers. June 2nd, $12.98, 650,000 shares. Only got into it on Friday with 390,000 shares. Not a big surprise. This thing could not hold that high. Went a penny over, closed back lower, and then fairly light volume today, so not a lot of follow through there either. Lincoln Electric, kind of an interesting stock. It pierced the previous high on a fourth of the volume. It's done nothing but go sideways since that August 15th high. I wanted to get to McDonald's and see what this was doing today. didn't have enough time to look at everything. But I wanted to see, this did pierce the previous low on Friday, June 27th, 116.08. It had 14 million shares, pierced it with 7 million shares. So this thing should have been able to close probably back into this trading range today. It's up on very light volume. I think that's one to be watching on the close very closely. See if there's anything else out here that I wanted to look at. GXP, then we'll look at a few of the FANG stocks. Have some questions to do that. Okay. As always, you can email me at path@tfnn.com. Great Plains Energy. This one was one that I thought was, at least from a test of a low, fairly decent. You had 12.7 million shares back on the 31st of May, made a nice low at 28.08 with 9 million shares. Only tested it with 1.8 million shares. What I dislike and the way I put these things together, if the energy is about the same as the way up on the way down, then even a light volume low only means you're probably going to get a bounce. That means you're probably going to bounce a couple of times, maybe 3 times before you bang out a bottom. If the energy from this July 11th high had come down and there wasn't any volume in the thing and it came down and then tested on 1.8 million shares, I think that would have told me that that was it. You got your test of the bottom was in, and that was it. This is Great Plains Energy. And we didn't. This thing got kind of a medium 50 cent, 70 cent bounce off these lows, and really not doing much, and no volume really to speak of today so far. So I'll watch a few more of these on how they come together. Looking at just a few more MSFT as we get ready to close out the show, and welcome the one and only Tom O'Brien to the golden microphones in the studio. We're off 3 points, still don't even have 2 billion shares, and we're closing out the show. Microsoft's another one of these stocks that has done nothing but go sideways. At lows, normally you have to say sideways actions are accumulation. At highs, you normally have to say that they're distribution. I would not be surprised to see Microsoft come back and fill this gap down to about $53.25, maybe $53.50, but that's probably maybe as high as $54. That's probably where this thing is going. Little juice in Facebook to make up for Apple being down today, but same thing on that one. APPL finishing up, and now I think confirming a Gartley pattern out here. We're going to watch the volume by the end of the day. But if we exceed Friday's volume in Apple by the close today, I suspect that we have the right-hand side of the Gartley pattern and on Apple, and this thing's going to move back down to 100. In the meantime, so when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time. Remember to tell somebody, tell anybody, tell 2 people, 4 people about the power trading.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.